Hello traders and welcome to another video review. Today is Thursday, March 10th, 2022. We are going to start with the Forex calendar. Some data had been published overnight. However, these data are not that much important as we think, because today's key event is of course the European Central Bank interest rate announcement, together with the deposit facility rate, marginal lending facility, monetary policy report, and ECB press conference. The market participants expect the ECB interest rate decision at quarter to 2 o'clock, and the ECB should leave the interest rates at the level of 0%. The same situation is with the deposit facility rate. It should stay at minus 0.50 and marginal lending facility 0.25. As we know it, the most important thing is always the ECB press conference, because many questions that are being asked not always have the same implications as the direct announcements, like the interest rate level. So at 2:30, ECB press conference, very important event. High volatility is expected during this event, so please keep an eye on the market behavior 2:30. At the same very moment, there are some data from the US scheduled for release as well. Consumer price index and the core consumer price index, together with the unemployment claims and continuing claims. All of this data are of course from the US. The last important data are from the New Zealand. We got the business New Zealand manufacturing index 10:30 in the night, and then 11:15 we got the Reserve Bank of Australia Governor Philip Lowe giving a speech. So because of the increased volatility on the ECB during the ECB news announcement, let's start with the euro dollar. Okay, let's start with the euro to the Japanese yen then, because it's already something that I have on my screen. As you can see, 50% retracement almost hit. It was missed of 10 pips miss to 50%. Bullish engulfing, breakout candle above technical resistance 127.37, another technical resistance 127.91, third technical resistance 128.27. So right now volatility is lower because we are waiting for the ECB interest rate announcement. If this announcement is way worse than expected, which means the ECB will hike the rates, the euro will rally higher. The next target, let me just do the zone. The next target for the ECB is between 131.59 131.88, and of course then at the top from the beginning of the February 2022 at 133.13. So please keep an eye on the euro to the Japanese yen. It looks right now, it looks very, very bullish. Very nice reversal here, V-shaped reversal after this breakout to the downside from this kind of a consolidation zone. But please remember, this is a daily time frame chart, so that chart this top here is from the beginning of the June 2021. Okay, so this is kind of a longer period of time here on the euro to the Japanese yen. So that reversal, V-shaped reversal, is very, very interesting. We know that we bounced from the 50% of the Fibonacci retracement. Let's just find out quickly what is the current level we are on. This is the last swing down, right? So what is the current level? I think it might be somewhere between 50 and 38%. Let me just put 38%. There you go. 38% is breached already. 127.71. So we are almost somewhere close to the 50% of the Fibonacci retracement. However, please notice the fact that in case of the interest rate hike, these levels will be broken easily. Euro dollar daily time frame chart. Let's take a look here. Finally, euro dollar daily time frame chart. So what do we have here? The euro dollar is of course bouncing. A V-shaped reversal is present here. So if we do this on the previous charts, let's take a look how much we have retraced already. This is the high, the local high, this is the low. I think we retraced 38%. There you go, we retraced 38% of the last wave down. We are approaching the key short-term technical resistance and supply zone 1.1122, 1.1164. This is the zone. In between there is a 50% Fibonacci retracement, 1.1153. So that's a kind of a interesting level as well. However, if the ECB will hike the rates, those levels will be broken like no tomorrow. We will be out of the channel, I guess, and then market will head towards 1.1485 to the end of the week. So please keep an eye on today's interest rate decision on the by the ECB. So what else do we have here that is worth mentioning? Despite the fact that there is ECB interest rate decision, I think we should take a look at oil, because interesting things are going on there. Please remember when I told you about the wave 5. Wave 5 is that was when we were first speaking about the market was around here, 88, 90, 91 dollars. Then we have the breakout above 96, and this wave 5 is now the extended wave 5. We have a very big decline yesterday, as you can see. So we are correcting right now. We breached the level of 108.6 and made a new local low. So let me just put it on the chart for you. 103.70. This is the newest technical support, local technical support for the market. I think the 5 wave of decline, advance, of course, has been violated and has been completed. So we can see these levels here. These levels here are, of course, the complete bullish wave progression to the upside. Let me just put the swing top. This swing top will act as a technical resistance, 130.44. Let's just put some correct coordinates. There you go, 150.44. This is the high, the multi-year high on the crude oil. Those lines here are no longer necessary for us because of the recent market behavior, of course, and now the chart looks much more better. So we got wave 1, 2, 3, 4, 5 completed. Now it looks like the wave A of the correction might be completed. So let's just start with the basic corrective pattern on the crude oil. We got the wave A. Now we should do wave B, and then we should do wave C, of course, because of this of a different there you go, that's what I mean, different degrees. Let me just put this ABC in red on the same degree level. So we got the letters in circles and we got the letters in circles here. So ABC correction is on the way on the crude oil. So we should expect a crude oil to decline. Where should we decline? I think it's very probable that we decline towards this consolidation zone, towards $95 basically on the crude oil. One more important data came from spot gold market. Very interesting behavior here as well. Big bearish engulfing pattern after the top at $270 basically. So we got this level here. that was almost the all-time high, another all-time high, because the all-time high is $2,075. Big bearish engulfing pattern. We are still trading above the short-term trend line, but as you can see, we got the demand zone and technical supports here: 1,958, 1,966, 1,973. This is the zone of a technical support. Let me just remove this this thing here. There you go. Now it's much more clear, so you can see what I actually mean. So we got this zone here. It will act as a technical. It will act as a technical support for the price. I think we should. What's the level? 2015. I think it's some. Yeah, this is the high from the year of the 2020. You will leave this one, but there will be no more highs except this one here. There you go. This is the key short-term, long-term high on the gold. This is of course the beginning of the rally, so we will leave the blue arrow here as well. So that's the situation on gold. Big bearish engulfing pattern here usually means we either stop the temporary advance or temporary uptrend of a lesser degree, or the multi-year or multi-month or multi-week uptrend had been completed. What we should see now is on the weekly time frame chart some sort of the, maybe, I don't know, maybe pin bar or something like this, and now we are building this pin bar. As you can see, if this pin bar is red, if the close on weekly, and we got only 1 day left, today and tomorrow, right? So basically today has started already, so we got only tomorrow. If this will be red, that's an extremely important bearish signal on spot gold market. Something very similar to this kind of a situation. Here we got the bearish engulfing on the weekly, and we got big pin on the pin bar on the weekly here. So what we should expect, look at this decline. What should we expect here? Look at this decline. However, if next week after this pin bar is big green candle, that would eventually means gold is in a multi-year bull trend, and that's of course that needs confirmation next week eventually. If we see green candle, multi-year bull market. If we see red candle, so the pin bar is confirmed and we are going lower, that's something typical for this market, and we should expect lower prices, but not with that the same dynamic as we see it recently. So that's my point of view for today. Thank you very much for listening to this analysis, and I hope I see you guys tomorrow. So take care and bye bye.